All right, so it is time to talk about forks. As you know, we are going to talk about soft forks and hard forks. And actually here the main point will be is that, so everybody thinks that the developers have some power here, right? So I will show you why this is not the case. I will talk about soft forks and hard forks, but you should know that Bitcoin designers, developers, always avoided to have hard fork. So Bitcoin didn't have a hard fork by the developers, but other people created hard forks for Bitcoin. So let's see how the forks work, okay? Changes to a blockchain network protocol and data structures are called forks. A soft fork is a change to a blockchain implementation that is backwards compatible. Non-updated nodes can continue to transact with updated nodes, okay? But they will not understand the updated version. So this is the thing. A hard fork is a change to a blockchain implementation that is not backwards compatible. So this is the main difference. It is important to note that while most hard forks are intentional, software errors may produce unintentional hard forks. For instance, this kind of thing happens most of the time with cryptocurrencies that support smart contracts. Because whenever you write your own software, for instance, for Ethereum, which supports smart contracts, maybe you made an implementation mistake. So a smart contract may work differently on your software. So this will cause a hard fork because your softwares are different. Okay, so this would be an example for an unintentional hard fork. Okay. With cryptocurrencies, if there's a hard fork and the blockchain splits, then users will have independent currency on both forks. So I will talk about Bitcoin Cash in a moment, but in that hard fork, before the hard fork, if you had 5 Bitcoins, after the hard fork, you have 5 Bitcoins and 5 Bitcoin Cash. That is the good thing. So you actually double your amount of money. So this is why whenever somebody wants to create a new cryptocurrency, they fear that maybe people will not be interested. So creating something from the scratch instead of creating from the scratch, they say that, okay, we will make a hard fork at block number something at the Bitcoin block. So if you do the hard fork there, anybody who has Bitcoins until that block will still have them in your new cryptocurrency. So this is a nice way of having a new cryptocurrency, okay? Keep that in mind. So I will give some examples for soft forks and hard forks in the following 10 slides. So if flaws are found in the cryptographic technologies within a blockchain network, the only solution may be to create a hard fork depending on the significance of the flaw. For example, if you break SHA-256, by breaking, I mean if you can find a way to obtain, for instance, pre-images or second pre-images, then we will not be able to use SHA-256 in Bitcoin. So we would like to move on to something else, maybe add SHA-3, but adding SHA-3 would be a soft fork, but removing SHA-2 and replacing everything with SHA-3 will be a hard fork. For instance, similarly, if somebody can build a huge quantum computer, that quantum computer can break elliptic curve digital signature algorithm or Schnorr signatures. So this way, it will be very easy for them to capture your private keys so that they can take the money of everybody. So in that case, we have to, make a hard fork. And after that point on, we should be using a digital signature algorithm that is quantum resistant, okay? So this kind of things, for instance, by having a flaw in a cryptographic technology, this is what we mean, okay? Either by technological means, for instance, quantum computers, destroying old algorithms, or if you find new weaknesses in these old algorithms, we have to make a change. This is why it was a good idea to include RIPE-MD in Bitcoin. This way we don't use SHA-1 and always use RIPE-MD and feel more secure. So when a recommendation is made for a significant upgrade, so in order to create a soft fork or hard fork, that will cause either a hard fork or soft fork. Miners simply have to change their version number in mine blocks to the new version number or leave it as it is. So let's talk about Bitcoin at this point. So whenever Bitcoin developers want to make an update, they actually prepare the update. They update their software, but say that this update will be effective after, for instance, 4 months later. Because until that time, in those 4 months, we will wait and see how many of the miners actually updated their software. So in order to understand, we talk about Bitcoin block headers, and in the header we had the part where we write the version. In the Satoshi's first block, the version number was 1, then it became 2 and 3 and so forth. So assume that we are planning an upgrade, and that upgrade will change the version number to 6. So during those 4 months, we look at the mined blocks and see in what percentage of them the version number is the new one, which is 6, or how much of them is the old one. So if we have like 90% or more, we will say that, okay, most of the miners are locked in. So this upgrade will be effective at the time that we predefined. Or if the number is really small, we will say that, okay, this upgrade will fail and people will not upgrade their software. So even as a developer, you design something, miners will decide if they're going to do that or not, okay? So this creates a sort of a vote and will either confirm or reject a proposal. The 2015 soft fork that brought in BIP 66 had 95% of the miners hashing power in agreement to change their block version to 3. So this way we knew that soft fork will work. So until that 2017, these soft forks were small additions to Bitcoin. But in 2017, we had the SegWit, and it was a very different experience. So before talking about SegWit, let's look at the obvious thing. A soft fork has 3 outcomes. The miners all agree, and the fork isn't really a fork, just a software upgrade. So this is what happened a few months ago in November, that we had this, Schnorr signatures and so on. All of the miners accepted that upgrade, and we have now that updated version, and nobody is using the older version. A majority of miners agree the new fork sticks and the old fork slowly dies. This can also happen, but generally this doesn't happen because whenever some miners realize that the majority is already upgraded their software, they just fall off. But the third thing is that majority of miners disagree and the new fork dies. Actually, in the first part, the SegWit, this is what happened to SegWit upgrade, because although miners said that they will upgrade their software, they didn't. Okay, so let's move on to the SegWit. So you can look at BIP 141. So this soft fork became, as far as I know, became effective at 24th of August in 2017, but actually it was planned a few years before. So this is actually a late update because miners didn't want to upgrade their software. So it is a huge and important story. Actually, I want you to read this blog, which actually explains in a very good way. So it is the long road to SegWit, how Bitcoin's biggest protocol upgrade became reality. So initially, the developers met with very big mining pool executives. I forgot the city they met, but they met in different cities. So if they meet in London, this meeting called is London, roundtable and so on. So initially, they tried to convince these people, and they said that okay, they will follow this upgrade, but they also said that we also expect you to make a hard fork soon, where you increase the 1 megabyte block size to something higher, like 8 megabytes. Okay, so this was their proposal. They will agree to this soft fork if they are going to have a hard fork soon. So although initially they said yes, when the developers tried to make this reality, miners didn't upgrade their software. So actually initially the SegWit update didn't run. So read this blog post. It explains everything in a very nice way, and at the end you will realize that people agreed to upgrade their software. So SegWit is short for segregated witness. Moves all of the signature data in a Bitcoin block to the end, lumping the signatures of all transactions together. SegWit solves the malleability bug, which is not much of a problem, but makes it significantly harder to build certain second layer protocols on top of Bitcoin, like bidirectional payment channels. So this malleability bug actually is not a problem. Actually, in theory, it works like this. So you have the transaction, you have the signature, and you take the hash of this, right? So including the signature there and taking the hash of it there allows somebody else to have the same transaction with different appearance, let's say. So assume that you sign a transaction saying that Alice transfers 1 Bitcoin to Bob. So people can modify it. It will still mean that Alice sends 1 Bitcoin to Bob, so nobody can steal anything with this malleability bug, but the appearance will be very different. So those transactions for a full node will look like the same because they will mean the same thing. But for a light nodes, they wouldn't understand if they see a transaction that is modified like this. So this is why they wanted to solve this problem, and this is why they wanted to, remove the signature from inside the hash and move it out. So this allows more transactions to fit in the same amount of space while maintaining the security of the Bitcoin blockchain. SegWit increases 1 megabyte block size virtually to 4 megabytes. So it is very actually hard to understand why this is the case, right? Because actually people think that maybe there is a compression or something so that this happens. But actually what they do is that the software looks at all of the sizes of all of the transactions included in that block and check if it is lower than 1 megabyte. So if it is higher than 1 megabyte, nodes will reject the block, even if you solve the mining problem in a correct way. But since they're only looking at the transactions part, if you remove the signatures from here, more transactions will fit in this 1 megabyte. So you will put the signatures at the end of this block. So this is why you have Bitcoin blocks, which is larger than 1 megabyte. That is the whole idea. So they're actually doing a trick here. But this trick is a very clever trick so that we avoid a hard fork here and solve it in a soft fork. This is very, very important. This is why it actually became reality. Because it was very hard to increase this 1 megabyte to 4 megabyte without the hard fork. And this is why they did a very good job. So SegWit is a technique that reduces Bitcoin transaction fees because since you remove the signature from your transaction size became smaller. So this way you actually pay less fees. So another soft fork happened like 7 or 6 months ago. So it's 14th of November 2021, we had the Taproot upgrade. So SegWit happens in a very hard way because it took years to convince people, but it was for some reason a lot easier for Taproot to become effective. So the Taproot soft fork introduces the concept of Merkle's abstract syntax tree, shortened as MAST, and Schnorr signatures to improve the scripting capabilities and privacy of the Bitcoin network. So we talk about Schnorr signatures a lot, so we know what it is. We never talk about MAST, but I will give a link if you're interested about this concept. But as far as I know, these are small additions, which actually in the future with more upgrades will allow us to have better smart contracts. So adding this kind of abilities allow you to have more ability in the future. Actually, this is what Ethereum does. For instance, they want to move from proof of work to proof of stake, but it is very hard to do it in a single upgrade. So they planned it in like 10 upgrades or something. So as far as I know, only 2 upgrades remain for them to move on to proof of stake. But still, we don't know if it will ever happen, or even if it happens, we don't know when will it happen. The Bitcoin network successfully activated the Taproot soft fork following a 19% lock-in consensus from miners and mining pools between blocks, this and this. So I don't have the exact number right now, but I remember this upgrade. So even if it happened in November, during July, we knew that a high percentage of the miners agreed on this new upgrade. So around July, we knew that the upgrade will happen in November because majority was already upgraded their software. So this is important. Even if it became effective in November, it became available months before to see if the majority will follow this new upgrade. Of course, the new properties like Schnorr signatures and so on can be used after it became effective at this date. So this kind of upgrades actually affects the prices of cryptocurrencies. So you can check Ethereum and Bitcoin upgrade dates and see how it affects the prices. But since this is not a course that I'm going to give you an investment advice, so I'm not going to talk about it. The milestone signifies the first major upgrade for Bitcoin since August 2017, which saw the launch of Bitcoin's leading layer 2 solution, the Lightning Network and segregated witness. Maths can be used to compactly represent contractual programs that will be executed remotely. And by using some of the properties of Merkle trees, they can also be used to verify the integrity of the code being executed. There's a very nice paper here. This report actually explains what this, Merkleized abstract syntax tree means and how it can be used. So if you're interested for the further read, I suggest you to, look at this report. So we talked about Schnorr signatures before, but let me recap with this slide. So this is from Bitcoin BIP 340. Bitcoin has traditionally used elliptic curve digital signature algorithm signatures over the elliptic curve SecP 256K1 curve, which are 256 hashes for authenticating transactions. ECDSA has a number of downsides compared to Schnorr signatures over the same curve. One of them is provable security. Schnorr signatures are provably secure. In more detail, they are strongly unforgeable under chosen message attack. This is called as SUF CMA. So this security of Schnorr signatures implies that they are non-malleable. So malleability problem also appears in elliptic curve digital signature. So SegWit solved that on the hashing part, but here we're talking about the digital signature part. So Schnorr signatures also implies that they are non-malleable. On the other hand, ECDSA signatures are inherently malleable. A third party without access to the secret key can alter an existing valid signature for a given public key and message into another signature that is valid for the same key and message. So as you can see, once somebody sees a signature and the message, they create another signature which actually valid for the same message but looks differently. So this is why we call the malleability problem. So again, for full node, this is not a problem and it has never been exploited in the past. But this doesn't mean that we should live with that. So this is why they try to remove this this malleability problem. So this issue is discussed in BIP 62 and 146. If you're interested, you can read more there. The third property of Schnorr signatures, we talk a lot because this allowed us key aggregation. We call it linearity. Schnorr signatures provide a simple and efficient method that enables multiple collaborating parties to produce a signature that is valid for the sum of their public keys. So a lot of people come together and they perform a multi-signature operation. This time, instead of multi-sig, the algorithm called mu-sig. And once they combine all of their public keys, the resulting public key will generate a single wallet address that starts with 1. So after this upgrade, whenever you look at the blockchain, whenever you see an address that starts with 1, you don't know if it is a wallet that belongs to a single signature or that is generated by combining some number of public keys. So this actually allows a little bit more anonymity if the investigating person is not a full node. Okay. So let's look at an example where we have a hard fork. So as you can see, this is just a few, like 20 days before the upgrade of SegWit. So when the developers wanted to have the SegWit upgrade, and this way improve the block size from 1 megabyte to 4 megabyte in a virtual way, some people said that this is not the best solution. So they said that they're not going to upgrade to SegWit, and instead they said that they will make a hard fork. So Bitcoin developers so far they avoided hard forks. They went great lengths to turn SegWit into a soft fork. But many people thought that instead of SegWit, Bitcoin's scalability problem should be solved by a hard fork that increases the block size. So some big miners in China said that instead of the SegWit, they will follow this new hard fork. So on 1 August 2017, a hard fork increasing the block size to 32 megabytes resulted in a new blockchain called Bitcoin Cash. So I remember those times. So it was, you can also look at the price chart of Bitcoin Cash to understand what happened. So 1st of August, if you had like 10 Bitcoins that day, now you have 10 Bitcoins and 10 Bitcoin Cash. So this is because your private key for the Bitcoin blockchain will also work for Bitcoin Cash blockchain because they copied the blockchain until that part. Okay, so your wallet addresses are the same. Your private keys will work there. But most importantly, exchange web pages also gave you this amount of money. So for instance, at an exchange web page, if you had 1 Bitcoin, after this hard fork, you had 1 Bitcoin and 1 Bitcoin Cash, which you can sell. So the main question was that people wondered what the majority will follow. That is, will Bitcoin will still be the main cryptocurrency, or will the majority will follow Bitcoin Cash and the original Bitcoin will be somehow forgotten? So some people who know what is going to happen actually sold their Bitcoin Cash at this dates with a very high prices and bought more Bitcoin. So you can look at the chart at Bitcoin Cash when from 1st of August, it makes a peak and slowly makes a very, in a logarithmic way, it drops. So this is actually a gamble. For instance, if Bitcoin Cash became the major cryptocurrency, now we would forget maybe Bitcoin. Okay, this is why actually Bitcoin developers are avoiding hard forks so far, because if they make a hard fork, the people might stick to the old blockchain, so they might ignore the developers, right? They may lose their ownership of the main cryptocurrency. This is always a gamble in that sense. So Bitcoin Cash provides 200 transactions per second. So the scalability problem is somewhat solved. But as far as I know, generally you don't reach these numbers. So such an increase currently is not that much used. But Bitcoin Cash itself later went through another hard fork to increase to 128 megabytes when Bitcoin SV split off on November 2018. So a hard fork resulted again in a hard fork and so on. So anybody having M Bitcoins before the split also has M Bitcoin Cash after the split. So that was the idea. But the important thing is that if you don't change the mining algorithm, a mining rig, a device for mining Bitcoin, can be used also for mining Bitcoin Cash. So this is somewhat a good thing for the miner, but this is also a problem. For instance, you assume that you created your own cryptocurrency, but instead of providing a Genesis block, you say that, okay, I'm making a hard fork to Bitcoin, and from this point on, this will be my new blockchain. But if you keep your mining algorithm the same as Bitcoin, since there are a lot of mining devices for Bitcoin, they might use their mining power to mine your blockchain and perform a 51% attack whenever they want. So this is why people always come up with new mining algorithms. So our next topic will be mining. I will explain this in more detail there.